And good evening, ladies and gentlemen. Good evening, great leaders and great scholars. Thank you very much for joining us once again tonight as we are meeting as leaders to come and learn, to unlearn, to relearn, and to co-learn together. We are here as leaders and as scholars to discuss leadership because leadership is a journey, it's not a destination. Everything revolves around leadership. That is why we must invest so much time and resources to deal with this phenomenon. Because without leadership, nothing will ever work. So we are meeting again tonight, as we always do every Wednesday's night, as scholars, as leaders, to shape one another, to correct one another, to empower one another, to inspire one another, to correct and admonish one another as leaders, because it's better if we do it ourselves, if we do it among ourselves. So that there should be, at some point, ladies and gentlemen, let me just say this, at some point, there should be a difference between someone who attends these sessions and someone who does not. And I'm sure you'll understand what I mean. We can't be here every Wednesday and we attend these super pamper master classes and we learn so much about leadership and we just become the same as other leaders. There should be someone who must say that one, definitely you can see that he attends the world leadership sessions every Wednesdays because of our fruits, because of who we are, because of how we do things. We can't be like others who don't attend, but we are also attend, and we are not obviously undermining any other sessions and any other platform. But we're just saying that we're putting so much effort every Wednesdays. We are so busy, but we attend here, and there's no. We need to be injustice if we really not change. Thank you. My name is Majola. I'm from the Worldwide Institute of Leadership and Development. We do this every Wednesday, and I'm not going to waste any of your time because I know we are very busy people, and you come here to listen to the speaker, to engage with the speaker. Tonight, we are discussing a very interesting topic, the importance of impeccable character in leadership. That's our topic tonight. The importance of impeccable character in leadership. And our speaker is my dear brother, Lungile Mabece. If you don't mind, Lungile, if you can just switch on your camera or your video as we are introducing you, and as we'll be taking us through your address. And I'm so pleased that Lungile really made it. And I want to thank so much my sister, advocate, Machobane, who really worked so hard to find my brother Lungile for us. And we are going to thank you, Anastasia, for that work. And thank you for Lungile for availing yourself. It was a very short notice. We had an issue with the speaker was supposed to speak to us or to address us tonight because of some family bereavement. But because we always say in South Africa, we are awash with great leaders. And that's what we've got a platform like this to unleash what we have in our country. So no one should ever come and say, no, but we don't have leaders in South Africa. No, Professor Zitha will tell you later. I always say we've got so much. We are replete with great leaders in South Africa, but we lack leadership. And that is what we must fix because we do have leaders. So we must just lack leadership. That is why we call ourselves leaders in leadership. So thank you so much, Lungile. Let me just introduce Lungile and he will address us. And after that, we will engage each other in answers and questions or conversation as we do. Lungile is an attorney of the High Court of South Africa who has been practicing law for 29 years. He has been a director of companies for more than 20 years, of some which are national state-owned entities. And he's a former chairperson of a national major state-owned company with operations and assets beyond South Africa, as well as publicly listed company with a JSE. He has served in various board committees, including audit and risk, human resources and remuneration, as well as social and ethics, of which he's currently sharing. He's also an author and presenter in conferences. He's a former commissioner in the Judicial Commission of Inquiry. We are talking about the importance of impeccable character in leadership. Thank you so much, Lungile, my brother. As I already said, thank you for availing yourself. Thank you for your humility. We welcome you here, and this is your people that are ready to hear from you. Over to you, my brother. Thank you, sir. Go ahead.
Good evening, everyone. Thank you, Prof. Firstly, I want to thank the opportunity to be part of this session today. And I also want to thank everyone who decided to leave everything else and come for this session today, just because I am here. I'd like to share my presentation. I'm not used to Zoom. I normally use Microsoft Teams. Can I just get assistance there? How do I share my screen?
Yeah, so it's the same thing, my brother. So you just go to share there. I've already given you the share rights, and then you just upload your presentation.
Can you see my presentation?
No, we can see something. There's a screen. It says you are screen sharing, but there is no presentation. So if you can just click to your presentation, then it would go straight to sharing.
Okay, I've clicked my presentation.
Okay, and then did you say share? Now we see you. So you open the presentation.
I've opened the presentation.
Right, and then you go to share, and then it will give you different, and then you'll see your presentation. Then you click on the presentation.
Okay, now I see the presentation.
Yeah, so you click on it. Yeah, it's coming.
Yeah.
Yes, it's coming. So if you are able to put it on a presentation mode from your side, yes.
Yes.
Excellent. Thank you, sir. You've got it. Wonderful. Go ahead.
Okay. Thank you. My apologies for the few minutes that I've taken of your time trying to learn something. Okay. I've already been introduced. I'm from Bulumko Corporate Law Advisors and Consultants. And the key presentation points for my presentation is introduction, definitions, King 4 Code, Companies Act, other laws, examples of practical lessons, risks in leadership, and key takeaways. And the topic for tonight is designed to invoke probing amongst ourselves, including on attainability of impeccable character. I'm also aware that some amongst us related the word impeccable to leadership instead of to character. However you read and interpreted the topic, I'm glad it provided you with something to think about. It is my intention to throw in something to generate discussion. In the process, introducing one or more inputs, maybe some of you have not had the opportunity to reach about leadership until tonight. And as I've been introduced as an attorney, lawyers like definitions. I'm one of those who understand the value of definitions because I also draft legislation. And I've two definitions that come from the Companies Act that I think are important for the purpose of our discussions tonight. One is the definition of a director, which means a member of the board of a company, as contemplated in Section 66, or an alternate director of a company, and includes any person occupying the position of a director or alternate director by whatever name designated. You see, the reason why this definition is written in the manner that it is written is because experience tells that there are people who are not even eligible to be directors, and they know it. But they get other people to be registered as directors, whilst they actually run the companies as directors. Hence, the definition is structured in the manner that is structured. And it's important for all of us as leaders to understand what that definition means. And of course, this definition of director in the Companies Act is found in more than one place. This, what I've read, is in Section 1, but there's Section 69, there's Section 71 as well, that talk about directors beyond what is in this definition. And one of the most interesting definitions I like in the Companies Act, especially when it comes to leadership, is this one: knowing, knowingly, or knows. When used with respect to a person and in relation to a particular matter, means that the person either had actual knowledge of the matter or was in a position in which the person reasonably ought to have had actual knowledge, or was in a position to have investigated the matter to an extent that would have provided the person with actual knowledge, or taken other measures which, if taken, would reasonably be expected to have provided the person with actual knowledge of the matter. This definition, I like it because it's designed to say to any person who is a leader, particularly directors in a company or prescribed officers, or any person who serves in a committee of the board. You cannot say, I didn't know, I didn't have knowledge when you are actually part of the company. So this definition is made to ensure that as a leader in the company, you take responsibility to have the actual knowledge. Hence, it is designed in the manner it is designed. And then I also have a definition of impeccable. And this definition is found in Oxford Dictionary. I use the concise Oxford Dictionary South African version. It says impeccable in accordance with the highest standards. Historically, impeccable has been linked to faultless or sinless. And then character is defined the mental and moral qualities distinctive to an individual, a person's good reputation. These definitions are important because it doesn't help to have a topic where people do not understand the meaning of the words and they end up being lost. Now, I'll quickly go through two principles of King 5 code, being the applicable code at the moment. The governing body leads ethically. Ethically is critical, underline, and effectively, underline, as the focal point of governance in the organization. And we know that King Code applies beyond the companies. That's why there's a general use of the word organization instead of a company. And the recommended characteristics and values of a governing body and a member of the governing body is, firstly, integrity. You must have integrity. Secondly, competence. Competence is very critical. That is why when there are adverts for board members, there are certain competencies that are required. And when people apply, they present themselves as meeting the competencies that are required. So when you are inside, you are expected to show the competence. And then there's responsibility and accountability. So you can't pass the buck when you are a leader. Take responsibility and accountability. Account not only for your actions, but also for the environment that you have created for certain actions to be taken. There's also fairness as a characteristic and value, and that is also very important because it also presupposes lack of prejudice when you're dealing with matters, including people. And then there's transparency. Hence, it's important to also make sure that where you are obliged to report, you report accurately and transparently, even if you are reporting to shareholders or to the public. And then we have the second principle is about organizational ethics. The governing body governs the ethics of the organization in a way that enables an ethical culture. Ethical culture is something that goes through the entity, and it's supposed to be starting from the head. So the individuals that makes the head as a governing body are supposed to be the examples of people with ethical leadership. And responsible corporate citizenship. The decisions we make are not only supposed to be focusing on how much money, how much revenue we can generate, and without looking at how are we doing that as responsible corporate citizens. And the governing body should provide the strategic direction and be accountable for the company's management of ethics, creating an ethical culture. So this is very, very critical. This talk about addressing a lot of things, including corruption, fraud, misrepresentation, and all kinds of things that companies and individuals get to be associated with. When we talk about responsible corporate citizenship, the governing body should provide strategic direction and be accountable for the organization's purpose, values, as well as for the impacts and outcomes of its activities and outputs, being congruent with responsible corporate citizenship. That is why these days there's also a lot of focus on the ESG, which is something practically every company and every individual needs to acquaint himself or herself with. And then we move to the Companies Act. The Companies Act is very critical in setting the standards. When one looks at the King Report together with the Companies Act, the two complement each other to ensure impeccable leadership, at least in the creation of standards. So we'll just quickly move to Section 66. Section 66, subsection 1, says the business and affairs of the company must be managed by or under the direction of its board, which has the authority to exercise all of the powers and perform any of the functions of the company, except to the extent that this Act, which is the Companies Act, or the company's Memorandum of Incorporation provides otherwise. So we know that the company's Memorandum of Incorporation is not supposed to contradict the act. And then the section 69, extension of definition of director to include prescribed officer and a member of a board committee. And it's also very important to note, Facilitator Prof, that I have not seen an advert advertising an executive position in companies where it is indicated that this position is for a prescribed officer, and therefore one of the requirements, the person must be eligible to be appointed as a director in terms of the Companies Act. And then section 69 also deals with ineligibility and disqualification of persons to be a director or prescribed officer. So this is very critical because it not only reflects on the expectations of a director and a prescribed officer, but it also reflects on the ineligibility and disqualification. And then we have section 71, subsection 3, that provides if a company has more than 2 directors and a shareholder or a director has alleged that a director of the company has neglected or been derelict in the performance of the functions of the director, the board, other than the director concerned, must determine the matter by resolution and may remove a director whom it has determined to be ineligible or disqualified, incapacitated, or negligent or derelict, as the case may be. This is very important. One of the interesting cases I've come across, I'm not going to mention the entity, is one of the big Gauteng state-owned entities, where in one annual report, someone who has been in the public for wrong reasons was a member of the board. And for the whole full year, the person never attended one board meeting, but remained a member of the board. Well, I don't know what happened to that case. Now, section 75, director's personal financial interests. This is also very critical because it's about the character. And section 76, which says the standards of director's conduct, particularly section 76, subsection 3, provides, subject to subsections 4 and 5, a director of a company, when acting in that capacity, must exercise the powers and perform the functions of director in good faith and for a proper purpose. People propose things because they are pushing for other people to benefit. And this is not supposed to be the case if one understands what section 76 provides. And it must be in the best interest of the company. This is one of the questions that people need to be asking themselves before they make any decision. Is this in the best interest of the company? Don't say I have instructions. Because the moment you say that, you are not acting in the best interest of the company. And with the degree of care, skill, and diligence that may reasonably be expected of a person. One, carrying out the same functions in relation to the company as those carried out by that director. So as a director, you are being tested all the time as to whether, in fact, your conduct, your character, and how you perform your duties as a director is comparable in relation to an honest, impeccable person who is a director. Number 2, having the general knowledge, skill, and experience of that director. So this is very important because showing firstly general knowledge, the skill and experience is also very important because that's the reason why you are a director in the first place. Section 78, subsection 2 also provides, subject to subsection 4 and 6, any provision of an agreement, the memorandum of incorporation, or rules of a company or a resolution adopted by a company, whether express or implied, is void to the extent that it directly or indirectly purports to relieve a director of a duty contemplated in Section 75 or 76, or liability contemplated in Section 77, or B, negate, limit, or restrict any legal consequences arising from an act or omission that constitute willful misconduct or willful breach of trust on the part of the director. See, people like to confirm if there's director's indemnity cover in an entity. And this section is specifically designed to make sure that even when that cover exists, you are not covered when you are conducting yourself in particular ways that are covered in this section. Now, there are also other laws. There are other laws that are directly or indirectly comparable to the Companies Act or incorporate the Companies Act by reference when it comes to the eligibility of directors or board members. You would think we can take a number of laws that establish entities, the organs of state that are very critical to governance in South Africa. They generally have a provision that is basically effectively copied from the Companies Act in terms of some of the principles. And this, of course, includes the Trust Property Control Act for trustees of trusts, and so on. But what's important for leaders is to read their governance framework in the context of broader governance frameworks for the organizations in South Africa, including the King Report and the relevant case law, because sometimes people make decisions on the assumption that the value of a document is based on what is only written on the document, without realizing that, in fact, it has become part of common law through the case law. Here, I have just highlighted two cases, and at least one of them is very known to people in leadership. The Organization Undoing Tax Abuse and Myeni. This is the case that led to Myeni, the late Myeni, being declared a delinquent in terms of the Companies Act. And this may not be a very much known case of Smarts versus Krommelboog Conversation Services Pty Ltd and another of 2024. This is also a very interesting case where someone effectively tried to abuse processes without fully understanding how governance and law is meant to work. But it talks to actions and people of characters that lack that impeccability. And now these are examples of practical lessons. I'm sure these are lessons that are still being learned. As we know, with regard to Steinhoff, this is probably going to be one of those monumental cases as it continues to unfold. Things that are happening, including the latest fines that have been imposed on some of the affected individuals. SAA, obviously linked to the outer case that I've just mentioned, and of course there are also other people involved. And then there's the Bangso case where the FSCA has apparently imposed a historic fine of 2 billion for governance irregularities and misrepresentations. And then the Cater Zone is one of the latest, where the CEO is said to have disappeared with about 500 million rands of investor funds in the preschool focused outfit. So these are examples, practical examples about what happens when there's lack of impeccable characters in leadership. Risks in leadership. The inability or failure to serve is one of the biggest risks, because there are people, once they get to be in leadership, whether they are appointed or they put themselves in, they consider themselves as gods. They don't serve. And that gets to be a big risk. Not being approachable and attentive to the people in the present moment it's also a very big risk. I'll just mention that with regard to this one, in part of instances where I served in boards, we were presented with the annual report. In fact, as new board members, we were inducted and then presented with this report, and it reflected also the assets of the entity. And it turned out that a very huge asset, an equivalent of a mall, a shopping mall, was not in the asset register. And if one was not considered to be approachable, would not have known. And these are benefits, basically, of being attentive and approachable. And as a result, we had to address those issues as part of the new board. Lack of self-discipline. So many people are known of attending board meetings without even having looked at the board pack. And a person goes and take decisions and be part of taking decisions without having looked at what they are actually agreeing to. Very dangerous. Self-discipline starts with yourself. And if you don't have it, it's a big risk in leadership, because you'll end up acting like some people were acting at the Zondo Commission when they were asked to explain their decisions. Lack of humility, a big risk, because it means you are not approachable. Always know it all. If you always know it all, you can't be in a position to learn more. You are closed. And that's not a good idea, especially in the evolving environments. And practically every environment is evolving as we speak. Corruption for own benefit or for others. And these are also big problems, because when people tend to get involved in leadership just because they want to serve themselves and others, contrary to the benefits of the company, it's a big problem. And of course, we are starting to see some of the challenges. And this is also one of those that makes one wonder how this can be addressed. Perhaps as part of this engagement, we'll talk about it. I have two people in mind who have been excellent leaders, leading very important institutions in the country at some stage when I got to know them. In fact, some of them even won awards. And during the course of time, they are now working in the shadows because of what they have been associated with. Lack of appropriate knowledge and exposure is also a big challenge. It makes a lot of sense to acknowledge when you don't know and you ask to be exposed. And the list goes on. And I would not be allowing discussions if I was to continue beyond this. The takeaways, I'll be very quick on this one, is impeccable character is possible, and this is shown by our governance framework. See, if we understand the governance framework that I've just reflected, and we apply it, then we will fall within what is considered as impeccable character. Acquainting yourself with the governance framework and abide by it. It's not enough to know it. You need to implement it. A leader is first an individual who must never stop to learn. A leader in the collective maybe an asset or a liability, depending on the character of the individual. We have seen this a lot. A leader must go beyond personalities when decisions are to be made. That is why you must always act in the interest of the company if you are at the company, in the interest of the country if you are a politician. Governance frameworks are not just there for display, but to know and apply in practice. Principles of King 5 Code and Companies Act apply beyond business, as I've indicated. And this is very important to always remember. Thank you for listening. And I leave you with the two quotes that I found it difficult not to include. One by Miguel Ruiz, be impeccable with the word, don't take anything personally, don't make assumptions. Okay. Don't make any assumptions, always do your best. And the South African proverb, a tree is known by its fruit. So it's very important not to even think about what it means to have an impeccable character. As this South African proverb says, a tree is known by its fruit. Thank you, Prof, and thank you for listening, colleagues. I can stop sharing.
Yes, sir. Yes, sir. You can stop sharing. Thank you so much. Thank you so much, Lungile. Thanks a lot. Wow, very informative there. Very, very informative. Thank you so much. We've got many people here who sit in boards and executives, and I'm sure this will assist you, ladies and gentlemen. Some of us, it will be just a reminder, which that's what we are here, really. Most of the things are just to keep on reminding ourselves so that we don't lose sight of it. These principles are important, very powerful. Ladies and gentlemen, now we can engage with Lungile, and then so you could see that what he did was a blending of Companies Act and the King's Code. So it's important to understand those two things. Very important thing he said there, that the usage of in the King's Code, it's more organization, but because it goes beyond companies, whereas in the Companies Act, it speaks about the company. And it's very important that we always remember that. But it's important to understand the complementary between King Codes and the corporate, or the King Codes and the Companies Act. Because people will always argue and say King Codes, but it's not a law. King Code is not like an act, sorry. But it's important. That is why we've got King Code. I mean, we've got King 5 now, from 1, 2, 3, 4, 5. That is very, very important in terms of corporate governance. So we can engage with Lungile now. As my colleagues are coming there, Lungile, can I just ask you a question? From your experience, what exactly that make board members or directors to struggle? You did say that others, obviously, it's a lack of discipline, people not reading their packs, not attending meetings. But what makes someone, when is, and I always ask this, what makes someone that this person, you are invited to come to be a member of this board, or you apply whatever, and then after that you don't become an asset of this, or take the best interest of the organization, as you said. Why really directors fail? In other words, what makes directors fail? Why directors would fail as board members? Any thoughts there?
Yes. You see, firstly, it starts with appointment.
Can you show your video there? Okay. If it's okay with you. Yes, yeah. Thank you.
Okay, no, that's okay. Firstly, it starts with appointments. Some people get appointed not because they are capable. They get appointed for them to earn an income, and probably to earn not only for themselves, also to earn for the benefit of those who appoint them. And that means that the person was not appointed because he's a suitable candidate to serve, but was appointed purely for the purposes of taking as much out of the entity as possible, without regard for the interest of the entity and those who are depending on the entity. I think that's the main problem.
Thank
and of
you.
course, there.
Go ahead, Prof. No, go ahead.
Yes, of course, there are other instances. You see, the question of humility is also very important. You know, I prefer to serve on a very few boards because I want to make a proper contribution in every board that I serve on. And there are people who accept every appointment they get. And when you accept every appointment you get, you cannot do justice to all those entities. And as long as there's no appreciation of such situations, people will just continue to accept appointments just because they say they're going to get paid, without looking as to whether they will be effective leaders in those entities by accepting, which is another challenge.
Yeah, absolutely. Thank you. Thank you so much. I've got a colleague of mine here in this call, Dr. Pat Mazubu. Is Pat Mazubu still here? Pat Mazubu still here. He's just written a book from director to executive. Very interesting book. I would like Pat, if you don't mind, I know that I'm ambushing you. If you don't mind, just to give us some glance in terms of what really made you to write this book. What has made you to what are dynamics and challenges when someone is shifting from manager to director, from director to executive, because that is what I find very interesting there. But we'll come back to you, Pat. Let's check. There's a question there in the chat room, and Lungile will answer it. And after that, I'll ask you, my brother, if you don't mind, just to share with us. The question there is from Malirato Kekana. Greetings, leaders. A great presentation there, Bob Mabece. Why is it that fellow board members are afraid to call each out when the conduct of another member is untoward? They simply observe and absorb. Powerful question there. You said this is the people are there in the interest of the organization or in the interest of the company. If they see that there's someone who's not doing it, why is it that they are not calling him, that person to order? Any thoughts there, Lungile?
Yes, I think one of the challenges is the fact that people consider themselves as serving in the interest of someone else other than serving in the interest of the company. You see, I've had an instance in one of the entities where I served in the board, where I practically had to raise the issue in a board meeting, and it was involving the chairperson. And some board members firstly reluctantly participated, but later on, when I quoted our responsibilities as board members, including what I've just presented to you in terms of the Companies Act, it's only then people started to realize that it's either they deal with the matter as they should deal with it, as I was proposing, or alternatively, they must then find themselves in a situation where they get investigated by the commission, the CIPC, for their lack of leadership. as directors. So it's a question of learning. People need to understand that they are actually not serving themselves. And it doesn't matter how long a person has served in boards and how many boards. That is not the standard. The standard is what have you been doing wherever you have been serving. Whether you have been serving with impeccable character as a leader. And the impeccable character will lead you to call out when a person is not doing what it's supposed to be doing.
Thank you, brother. Thank you very much. We've got other question there in the chat room. My brother, Dr. Pat, are you ready? Pat Masibuko?
Prof Majola, you are on mute.
I was on mute. I've been talking to myself. Zitha, thank you so much. Who could assist me there other than you? Thank you so much, Zitha. So there was a question there from Professor Zitha. Lungile, can you briefly touch on the board's performance evaluation in order to address weakness and strengths? Over to you, Lungile.
Okay, a board performance evaluation is very important as a framework, but I've experienced situations where board members don't do honest evaluation. So when you look at it as a practice, it's meant to help to provide evaluation about board performance, both in terms of individual board members, board committees, and including the chairperson. But in practice, its use depends on the users. If the users are people who are not honestly doing a reflection of the performance of the different board members as individuals as well as the collective, then you are not going to get the value that you should be getting. You may even get outsiders to do that board evaluation, and it's just going to cost you money. But of course, it's also used to provide proof that the board is transparent in itself being evaluated externally, without necessarily meaning that there's value that the company is getting. So there are challenges with it. I think the board evaluation, it needs to be regarded as one of the tools, and the performance of the entity needs to be considered also in relation to the performance, to what the board evaluation outcomes show, instead of just looking at the board evaluation outcomes as if that reflects the performance of the entity, especially of the board. Thank you.
Perfect. Thank you. Thank you so much. There's a question even before I go, but Dr. Siphe Potelo, who should evaluate the board? Go ahead.
Okay, there are basically two practices I'm aware of. One is to get the company's internal audit function to do an internal evaluation of the board, because it's just the processes. And then there is the external evaluation, which is ordinarily commissioned by the board. And sometimes it is commissioned by the shareholder or shareholders. It really depends on the preference of the company, but the responsibility is always that of the board. And the choice of external evaluation is always preferred unless the entity has financial constraints, because the external evaluation is done by people who are not afraid of anyone. That's the assumption. They are independent and they are in a position to do their evaluation as unattached as possible to the entity.
Thank you, sir. Thank you very much. And ladies and gentlemen, we must always remind ourselves that always when we're talking about assessment, evaluation by external independent body or someone, it seems like it's always like come and pick up what is wrong, bad stuff. Yes, that must be done, but also the shop is something that is good. I mean, that report must reflect the good stuff as well, the good things the board and the company has been doing, and or the bad stuff, so that the good stuff then they can continue do it, and the bad stuff they can correct doing it. So it's not only about really what are the wrong things that this is doing, as though now a consultant or someone's coming outside is just picking up the wrong stuff here, but it's just that balance that is important. I see a question there. They will follow each other. We start with Dr. Sipe Potela, will be followed by Dr. Chuma Mangisa. In that order, let's take both of them, Lungile, and then you will respond to both of them. Dr. Potela, over to you, sir.
Good evening, Prof, to you. Good evening to my colleague, Mr. Mabece. Well profound. You know, hey, governance, I so wish we could have a long time. One question before I start. In South Africa, as far as your experience, knowing very well that public entities collapse, what would have been a good mechanism to restore trust? Because these entities are the policy formulation and trusted advices to shareholders for, if we talk economics and two streams of economics, in a majority population that is poor. If you check now on second stream of economics, a small minority who is a capital in terms of the capital, in terms of the business sectors. What will be the issue of restoring confidence in the current juncture in South Africa in terms of public entities? Is it a failure of shareholders, where they dissolve the board and then bring again the majority of the board that you dissolve back to the entity? Thank you very much. I don't want to waste time. Thank you very much, Prof. Majola. Thanks, class.
Thank you, sir. Dr. Chuma Mangisa, over to you.
Yes, thank you very much, Prof. Am I audible? Okay, thank you so much. And thank you, of course, to Utata Mabece. Andazi ngoba ngurhadebe na tata bakhona uMabece endibaziyo abangorhadebe. Thank you very much, tata. Enkosi kakhulu. Thank you once again for being well, for us to drink this palatable water, you know, that we have just received, Prof. but you stopped the well, while he was still eager, to continue with your time frames, Prof. I wish it was a bit longer, but maybe he will come again at some point in time. The question that I have, Dr. Mabece, at some point in time during the time of the tenure of late Prevan Godan, there was once a move to consolidate about 13, if I'm not mistaken, of the state-owned enterprises through a bill at the time. I'm not sure whether this is still on. Through a bill that was called the National State Enterprise Bill, NSEB, that looks at establishing what they call a state asset management, SOE Limited, SAMSO. That at some point in time, they will then establish what is called a super board. A super board that will look after more or less 30, state enterprises, Eskom, Transnet, you name them. Now, having heard, listen to what you are saying, Dr. Mabece, that sometimes quality over quantity, the number of boards that you are sitting in, quality is important, not the number, because the number then make you not to be able to analyze or read the board packs. Now, where I am coming in with this, I don't know where it is, if they are still moving with this, if government is still moving with this. What would be your opinion? What would be your comment in consolidating, putting all these entities under one state-owned entity and consolidate the boards to what is called a super board? In light of the current failures in some of the state entities that were listed to be part of this super board, I would like to get your comment there. You would have your Eskom, your Transnet, your SAA, whether it still exists or it doesn't. Yeah, the post office, Denel, so many of them. I will stop there. Let me hear your comment, Darushlu. Gosba.
Okay. No, thanks. And maybe let me start with the last one. I'll go backwards. My comment in consolidating entities under a super board, I think, is ill-advised. And the reason why I'm saying it's ill-advised is because the experience, firstly, with regard to other countries, is that you only do that when you have mastered governance and your entities are operating efficiently. Because when you are dealing with different industries, if you place them under one board, and remember, when you say board, you are effectively creating a company, and the board will have the same responsibilities that are listed in the Companies Act. And you are looking at a very broad range of major entities. If you take the example of Eskom and Transnet and them, these are massive companies. that are bigger. In fact, some of them, like Eskom at one stage was bigger than all the electricity-related industries in South Africa combined. At some stage, I don't know if it's still the case. So if you take that entity and you place it under a board, and that board takes responsibility of that entity and other entities that are also unique and very central to the economy of the country, you are actually designing for a failure. That's my view. And that's one of the reasons, in my view, why after the closure of the Department of Public Enterprises, the different state-owned entities were moved to their respective departments where they were supposed to have been properly dealt with. Because it makes a lot of sense when you place them under the policy departments. So that's one challenge. But the other, in Gauteng province, we have an experience of something that was called Shared Services Center. Maybe some of you have heard about it. That came into existence, I'm not going to say under whose leadership, but when the Shared Services Center was introduced as a department, it was meant to consolidate all the budgets of the other departments. And it became associated with the Center for Looting and under delivery. So you don't want to have a situation where when there is failure, it gets to be so spectacular and there is no room for saving because you have consolidated everything under one roof. You don't want to have a situation like that, ideally. So it's a very big risk to the country. And now on that proposed consolidation of 13 SOEs through a bill, my understanding is that process is still underway, led by the presidency. I don't know who in the presidency. And at some stage, I'm aware that one of the former DDGs of the Department of Public Enterprises was appointed to the presidency to actually assist in the process of giving life to that consolidation. But I must also say that consolidation at a sector level has also been a very big challenge, because when you do the consolidation of companies, there are a lot of things, and amongst others, when you deal with companies that are also subject to the Companies Act, you must also deal with the issues of solvency and liquidity. You must do proper due diligence to make sure that the entities are able to function collectively without prejudicing the entity that is being proposed as a consolidated entity. And now, how to restore confidence to state-owned entities? I think it starts with who appoints the board. Because when you have the board that gets appointed by politicians, we have seen, in fact, interestingly, if some of you would recall, when Eskom was in big trouble and Pravin Gordhan was appointed as the Minister of Public Enterprises in 2018, part of what he then did, he said, I'm going to turn around these entities. And part of what he did with Eskom was to have a very comprehensive CEO profile that was published with requirements that were so stringent, including the fact that for you to qualify, you must have been in the executive of entities with over 40,000 employees with a turnover of this, which is excluded even former CEO of banks and others, except for big mining companies. But guess what happened? they ended up appointing someone as a CEO who had never led beyond 1,000 employees. As to how that happened, I still don't know today. So that's basically how politicians do the appointments, and in the process, affecting the reputation of state-owned entities. So it's very, very important that if confidence is to be restored on the SOEs, we must deal with how best to do the appointments. If the appointments are not done by the boards themselves, as it happens in private entities, at least there must be a transparent structure that should be involved, but that, in fact, that structure should be properly constituted. Like you have the advisory councils of the president, where he gets the best of the best in a particular field to constitute the council. For instance, the council on ICT, that is made of people like Attorney Lungile Mabece and others, even international people. That's the kind of a council you may want to establish for the purposes specifically of dealing with the appointment of boards, if you don't allow the boards themselves to deal with that process, bearing in mind their compliance, the impeccable character that is required for them to sustain and act in the best interest of the company.
Thank you, sir. Let us take the last round, and then Lungile will let's go to the chat room. This is our last round now, and then Lungile will respond to them. So let's just see those ones. If not, okay, Dr. Tandiwe Gama, thank you very much for an informative presentation, Prof. Lungile. Please help provide some insights into what is or should be an objective and effective or even transparent process of selection and appointing professionals to board portfolios. I think that's what we've just referred to, Lungile, but you can just touch a little bit if maybe. And then Victor, question answered. Thanks, Prof. So there's a question from Victor there. He's covered. And maybe if you can just touch that one, Lungile, and then after that, if you can just give us your parting shots, your closing remarks, and I'll ask Prof. Zitha to close the session. Over to you, sir.
Okay, I think what's important with regard to the appointment of boards, there's a need to standardize the requirements so that we know that for a board, you need a multidisciplinary team that deals with various aspects of the company. And with the companies now also having obligations, the ESG obligations, which is basically, anyway, part of the obligations that the country has signed to. Hence, in terms of Regulation 43 of the Companies Act, we have those obligations and for social and ethics committees. So you effectively need to look at all what the company needs to be doing. And where it's a specialized company, you need to skew the board membership to professionals that are necessary to guide the company to perform its best, to be at the apex of innovation when it comes to the industry concerned. So professionals must be appointed, and it must be a requirement. And they perhaps even have a scale to indicate that, a formula that says for
Seems like Lungile is hanging there. Are you coming all right, Mr. Mapete?
in the company. You need
Oh.
that mix. Yes. So that's basically what I would say. Standardization. Thank you. And then as my parting shot. Sure. Hello, can you hear me?
Go ahead, Lungile. Sorry. Go ahead. Go ahead, sir.
Okay. As my parting shot.
Just hold on. I'm trying to mute Dr. Khumamangisa there. And where is he?
Sorry, Prof.
Yeah. Now he's muted now. Go ahead, Lungile. Go ahead, sir. Thank you.
Okay. I've closed my camera because something says low network bandwidth on the screen.
No,
I
that's
don't
fine.
know what's mine. Okay.
Fine.
So as my parting shot, impeccable character in leadership has a base in terms of our governance framework as a country. But what is most important is for leaders to acquaint themselves with that framework, and also for all of us to assist each other. I am glad, Prof, that you have this institute that enables this interaction, so that those of us who want to acquaint themselves and learn more, we can always join this platform and hear what we don't know and grow as we are meant to grow, not only for ourselves, but for the benefit of the institutions we are meant to serve. I thank you.
Thank you, sir. Thanks, my brother. My professor, over to you. Is Professor Zitha still here? Yeah. Go ahead, my professor.
Good evening, my professor. Can you hear me? Okay. Yeah. Lungile, thank you very much for this very interesting and informative conversation. Indeed, the topic is about the importance of impeccable character in leadership. I must confess that you have definitely presented an impeccable presentation. Starting from your definitions, going through the details contained in the Companies Act. But what I found also very interesting in your presentation, Lungile, was reference to the King 5 report. Initially, you said you will briefly comment on King 4. I said, well, we've gone past the stage of King 4, but when you said King 5, I said, yeah, we are on point. I must also say, Lungile, that I just shared the news with Prof. Majola, whom I must really thank, sincerely from the bottom of my heart, because without him and his dear wife, Dr. Majola, this platform would not have existed. So it is able to source and generate information from the likes of you. And so for that, I think it is worthwhile to, whilst thanking you, equally expressing our gratitude to him. You also touched on the directorship, how directors are appointed and how they should really familiarize themselves with governance frameworks. I think this is where the challenge is, where directors sometimes fail to take one another to task, particularly when it comes to weaknesses and risks within the system. I was asking that question, which I put on deliberately, about board evaluation and performance. And indeed, the point that you touched on about external evaluation, I think for me, that is certainly the way to go, because external audits and evaluators don't really have any specific personal interest. They, as you have also outlined, they've got nothing to gain, but they've got their responsibility and character and career to protect. There is a book that is hopefully going to come out before the end of this year, and I've requested my professor, Prof. Majola, to write a foreword. And the title of that book is Climbing the Corporate Ladder Together. And in it, we have tried to explain exactly the risks which you have identified, and particularly that the delinquent directors, the directors should really immediately act on them, because what you refer to as people who serve as directors not attending meetings, I think it is something that you are sensitizing us on this platform, because we cannot claim to be leaders whilst we are irresponsible in our approach. And so we really want to thank you. You specifically referred, to other laws, which is quite good, and the examples which you gave about Steinhoff and others. But and the risks which you identified are also very impeccable. And then, of course, finally, with the takeaways, I think, Khadebe, you have really outdone yourself, and you have touched every button that we would want to know about impeccable character of leadership. And finally, as Prof indicated, I always say we've got many leaders in South Africa, very, very, very many leaders, but there is lack of leadership. What do I mean by that? I mean, in the public sector and the private sector, we've got leaders, this and that, but do they understand the governance framework, which you have referred to? I think this is where the critical problem is. And of course, with Worldwide Institute of Leadership, the DSA, these are bodies, independent bodies, which train boards on what their responsibilities should be. And so I am equally, to the colleagues here present, marketing Wild, that Wild can offer services which IODSA offers, but at a reasonable price. So let us spread the gospel and saying that we are not only members of Wild, but we are also capable of doing exactly what you shared with us. With those few words, Khadebe, thank you very much for this instructive presentation, well-structured presentation. And I think out of it, Prof. Majola would agree with me that out of this presentation, we really need a book. I was looking forward, I was looking forward to Dr. Mazibuko, and I need to get a copy of that book from director to executive, which, as leaders in this platform, we should really rise to the occasion of making it our responsibility to grab any book on leadership. Because Prof. Majola said we are here to unlearn, to learn, to relearn, and co-learn. And we can only do that by presentations such as your presentation, Khadebe, as well as empowering ourselves through reading, writing, listening, etc., etc. And so, thank you so much, Mtimkulu. May God bless you. May God bless Africa. Prof. Majola will say we meet every Wednesday. Just put aside 2 hours, 1.5 hours of your time every Wednesday, 6 o'clock to 7:30 to 8 o'clock. and we are here for each and everyone. We're looking forward to a similar profitable conversation next Wednesday. Back to you, my professor, and thank you so much for who you are to me in person and to this group. Thank you so much, my professor. Back to you.
Thank you very much, my professor. Thanks a lot. Indeed, Lungile, thank you very much, my brother. You've really empowered us and inspired us. We are full. There's so much that we've learned tonight. Thanks a lot. Ladies and gentlemen, the session is adjourned now. And thank you to those who joined us for the first time. By the way, thank you so much. Please do remember that we meet every Wednesdays, as my professor has just alluded to. So please do join us again next week, Wednesday. Same time, same place, same details, everything the same. May God bless you and may God bless Africa. Nkosi Sigaleli Africa. Thank you so much until we meet next week. And goodbye. Thank you. Bye.